Hey everyone, it's Spencer Hakimian and welcome back to another episode of What's Moving Your Money with Forbes. On today's episode, we are going to be talking about China's full and complete boycott of all soybean purchases from the United States and the consequences of that. Next, we're going to talk about the rise in import prices that was confirmed today, along with the hotter than expected retail sales report and what all of that means for the market. And finally, we're going to be talking about what Scott Bessent said about most likely delaying the deadline for the United States and China tariffs yet again. So we have a busy episode, so sit back tight and I hope you guys enjoy. So we've got a pretty big problem on our hands right now. It's been reported that China has not bought a single dollar worth of soybeans from the United States in the second quarter of 2025. No, I'm not kidding. Go on my TikTok, go on my Twitter, go on my Instagram. I posted a short reel on this today. They have not bought a single soybean from the United States since essentially Liberation Day. Now, this actually isn't such a new tactic for China, believe it or not. They did the same exact thing back in 2018 when the first trade war between the U.S. and China during the first Trump term was going on. And it ultimately resulted in American farmers needing a $20 billion bailout from the United States federal government. Now, that is essentially double the amount that GM and Chrysler needed back in 2008 during the great financial crisis from the government. So I want to ask you guys, and I want you guys to comment your opinion either way, because I want to hear from everyone. Do you think it is fair that American farmers may once again need a bailout from the federal government due to the exact same thing that we did in 2018 that evidently didn't work? Because if it did, we wouldn't be doing it again. Let me know in the comments what your thoughts are. Is this fair? Would you support it? I want to hear from all of you guys, regardless of what your opinion is. Next, we want to talk about import prices because they came in for the month of August at 0.3% month over month growth versus an estimate of them falling by negative 0.2%. So it was a plus 0.5% swing to the upside. Now, this is really important and critical because it's proof that foreign producers are not eating these tariffs. It really can't be any more obvious at this point in time. Foreigners are not paying for these tariffs. American companies are and American consumers are. Goods come in to ports in the United States, companies take them and they pay the tariff then, and then companies either swallow the cost, which is bad for American companies, or they pass on the cost to American consumers, which is obviously bad for American consumers. So this is either going to be bad for American profits or it's going to be bad for American inflation and for American consumers. There's not really a good middle option here. We're dealing with two pretty bad options. There's not really any other way to sugarcoat it. I really try my best to be impartial on this show and just deliver the facts with my analysis when it is appropriate. I just can't see the positive in this based on all of the data that we have received so far. But again, maybe you have. So if you have, let me know what you guys think. I'm open to any suggestions and I always am willing to change my mind if better ideas present themselves. Next, we got to talk about today's retail sales report because nominally it was actually a really strong report. Really strong, believe it or not. But the key word, go back to what I just said, nominally. Retail sales are measured nominally. It's not like GDP where it's measured in real terms. So it makes sense that retail sales are beating because the price of stuff is going up. If you remember back in 2022 when we had the crazy inflation crisis, retail sales were coming in at like 1.5% growth on a month-over-month basis. But that wasn't a strong economy. That wasn't a strong stock market. That wasn't retailers doing well. That was just inflation passing through into those prices. It was not so much of a surprise to me that retail sales beat on a day like today because we know inflation is rising. We know import prices are rising. We know manufacturing prices are rising. So of course, retail sales are also rising. I believe that my opinion was vindicated today, because if you look at the stock market on a day like today, it was down. That shouldn't happen. Imagine if retail sales were truly doing so well on a real basis. Stocks would soar. What's better for stocks than a healthy consumer and retail sales booming? Stocks were flat to down today because markets are looking through and they're seeing this is just inflation. This is not real economic growth. And finally, to end off today's episode, I want to talk about what Treasury Secretary Scott Bessent said on CNBC yesterday. He said that he expects President Trump to accept another pause on Chinese tariffs. And the reason for that was that they cannot get to a full agreement as to what to tariff, what to exempt, and what to obviously go forward with and what to stop in its totality. Now look, this is a trend that has simply continued since Liberation Day. They are trying to negotiate way too much at once, and it's not working. It is simply not working from a negotiation perspective. It is too many deals and countries and people that they are trying to work with at once, and they cannot get all their affairs in order to do all of this. So what ends up happening is they constantly end up pausing and delaying and extending these tariffs. But, and this is really the important part, that's actually a problem. Businesses are having a very hard time making investment decisions, making hiring decisions, making product decisions, making pricing decisions, because they just don't know what is gonna happen. At any point, he can get on Truth Social and say, you know what, forget all of this. Or you know what, we're going back to 150% tariffs. Businesses, Wall Street, corporate America, we hate uncertainty. Above all else, we hate uncertainty. It's not always the policies that, don't get me wrong, policies can be bad. But first and foremost, it is uncertainty that causes businesses to slow down. So many recessions in history were not caused by any actual one specific thing. It was just enough uncertainty that got people to stop spending for a little bit of time, and that snowballed into a recession. So guys, that's gonna do it for today's episode. I want you guys to comment your thoughts, anything you want me to comment about or make an episode about in the coming days and weeks, and I'll see you guys soon.